Let's talk a little bit more about the broader market and how the Fed is viewing all of this latest data as officials publicly edge closer to the idea of rate cuts. Joining us right now is former Fed Vice Chairman Roger Ferguson. He's the former president and CEO of TIAA. He's also vice chairman of the Business Council and a CNBC contributor. And Roger, we've all kind of assumed at this point, at least the markets have, that there is going to be a rate cut in September unless we see some startlingly different data between now and then.
No, thank you, Becky. I think that's probably the right assumption this time. For the last year or so, as you and I have discussed, the markets have sometimes been ahead of the Fed. I think right now there's a much better alignment. As I listen to the Fed speak, including, importantly, Chair Powell, they're clearly talking about the dual mandate. They're clearly signaling an increasing confidence. So I, too, believe that a September cut right now seems like the more likely outcome.
Holy cow, stop the presses. Roger, that is the first time I've heard you say that. And you've been right every step along the way in this journey. As the former vice chair, you obviously know what you're talking about on these things. So you think that's the case at this point, too. I guess I would point to politics around the edges. And I know we've had this conversation again and again about how the Fed doesn't really consider politics. But I think at this point it's reached kind of a crescendo rate. And it's hard not to hear some of what's being said and at least internalize that, even if you're trying desperately not to allow politics to affect you. Donald Trump had an interview with Bloomberg this week with a number of the reporters there and said a lot of different things about Jay Powell and the Fed. He said, first of all, that, he's inclined to keep Chairman Powell in that position. But I think the coda that came with this was assuming that, he kind of does what he thinks is right. And one thing he would not like to see is any cut in interest rates ahead of the election, thinks that would be helping out his competitor in that case. Does that have any sort of weight that takes on? And if there's a number, a data point that comes out between now and then, is that something that they say, OK, we really have to hold on because you have a lot more riding on it this time around?
So I think there are a couple of things. First, recognize on the issue of politics, the history of the Fed does not look kindly on former Fed chairs who have given in to political pressure in the past. And so I think the institutional culture is to try to drown out or ignore all of the noise. Secondly, recognize that in this case, there's going to be howling on either side. If they cut, if they don't cut, someone in the political fray is going to be unhappy. And so that's just, goes with the territory when you're moving or even not moving this close to an election. I think you raise a good point. If there's one data reading that maybe leans in the other direction, I think they'd be unwise to overweight that, given what they've said. It feels to me that, all of the Fed speak and the numbers coming in thus far are consistent with, a first move in September. And I think they'd be, wise to make sure that the data talks as opposed to listening to politicians on either side, because they're going to get contradictory pressures, and they should recognize that's just part of the game right now.
So let me ask you this. If you think the first cut is coming in September, does that mean you think that this is the beginning of a number of cuts to come, or is this cut, pause, look around, see what happens next?
Very good question, Becky. And we've just seen in the ECB case, for example, cut and pause. Some other banks have cut, and I think they're waiting to see what happens. I wouldn't necessarily say this is the start of a reduction campaign. The Fed will continue to be data dependent going forward, but they want to recognize that they don't want to let their rate drift into more restrictive territory than necessary, and they certainly don't want to risk slowing the economy unnecessarily by holding on for too long. So I'd say one cut and still being data dependent, and let's wait and see what happens.